Good morning and welcome everyone to the Trading Success Blueprint, the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. Let's go through the structure of the webinar, what will happen in every step. So initially, we will begin with a quick introduction to the company, what services we have in this facility, which is, by the way, called the Web Trader. There's no need to install or download anything to get to here. You just need to log in with your email and password to avatrade.com. Okay, so the first part will be more of an introduction to the company and the services we have in this facility. The second segment will be the majority of the webinar. It will be purely practical. We'll go through basic essentials for trading, how we can design a position, and how we can approach the market with a certain logic and not just randomly to take a buy or sell. And lastly, at the end of the webinar, if we'll have any spare time, perhaps we'll discuss just the basic of analysis. We're not going to do anything crazy or sophisticated in here, but we will just understand the approach that we can take, how to understand the different analysis we have, which is fundamental and technical analysis. All right. And also, any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, a very common question is if there is a possibility to see the recording of this webinar. And as I always say, yes, there is, and it's very easy to access. All you got to do is just to go to YouTube, search our channel, YouTube's AvaTrade channel on YouTube, and in there you can find the recording of this webinar and other webinars and a lot more content there, which is useful about analysis and different topics as well. It seems like there is a slight delay between what the screen is presented on my the screen that I see and the screen that there is in the software. I hope that everybody can see that I'm moving my hand now and that it works fine and there is no delay. Okay. All right. So like I said, this is the Beginners Online Trading webinar. My name is Danny and we can finally hit the road. Before we will begin, let's get ourselves somewhere to write down the notes. As I have explained, we will begin with an introduction to AvaTrade. As many of you know, we exist since 2006. We have 9 licenses worldwide. In case you got a query or a question, you have the customer service here at the bottom left. You can chat with us or send us a WhatsApp message. Or if you're using a different interface, you can send an email to cs@avatrade.com. As I've explained, this platform is called a Web Trader or Web Trading. And it also, this is the desktop version, but you can also find it in the app. It's called AvaTrade Trading App. Okay, and you can find similar facilities, the same we have here. It looks different because this is a phone and this is a computer, but the services that I'm going to show you today are accessible via the app as well. Now, beside what we are looking at right here, we also have the traditional platforms, MetaTrader 4 and MetaTrader 5. It's important to understand that they both interact with the Web Trader. So basically, I can do the analysis here and modify my trades in MT4 or MT5 or vice versa. I can do my trading with MT4 or MT5 and then come to here, and in my positions, I can modify whatever I need. Beside MT4 and MT5, we also have AVA options and AVA social. Okay, AVA social allows you to do 2 main things. It has 2 main functions that can assist you. And the reason is that in AVA social, you can follow or copy another trader. When I'm following another trader, that means that I'm going to get notifications with the traders that I'm following took. And I can then, with these messages, with these positions, I can choose if to open a position similarly or not. So I can either execute the positions the same way, or I can just use it for research, or if I'm testing a strategy, okay? But the positions will not be executed automatically. With copy from the other end, the positions will be executed automatically, and I can then go to my trades and see what traders this trader took. Okay, so quickly, a quick recap. With follow, I get notifications, and I can choose if to trade the same way or not. And with copy, the trades will be running automatically on my behalf, copying the exact same way that the other trader is doing. Now, the huge benefit using Ava Social on and doing copy trading with it is that we can customize the lot size to something else. So in case we're copying somebody with a bigger amount or with a different amount than ours, we can adjust in choosing the app that we would like to copy the strategy, but not with the same lot size. This way we can examine and contemplate before we're copying it to its full extent. Okay, which is just one of the useful things that this app has to offer. And besides that, the app itself is free, so honestly, there is no reason not to give it a shot and just download and see if it's good for you or not. This is about the platforms that we have. We're going to proceed with the facility we're looking at right now, which is, like I said, the web trader. And again, to get to here, you just need to log in with your email and password. So let's begin from, actually, let me show you something new today. Something something that we don't always begin with, and this time it will be a unique feature called Ava Protect. What this feature does, it basically allows you to protect the positions for a certain time frame. So let's jot that down. Ava Protect. Okay, allows you to protect the position for a certain time frame. Of course, you don't have to remember that because it's written right here, but with a different interpretation. So I'd rather put it with my own words, very simply, but you don't have to remember, it's written right here. So it allows you to protect the position for a certain time frame. Whatever you lost during that coverage, you will get back. Okay, and there is a fee when using the service. Okay, whatever you lost during coverage will be returned. Okay, and that means only during the coverage. Now, what does that mean in reference to what we're looking at now? Let's bring up an asset. Oh, it's important to also understand that Ava Protect only works with Forex, gold, and silver for now. Maybe later we'll have more, but this is what we have now, and we can demonstrate it with gold as an example. And what happens when I click here, when I tick this box, it allows us to choose the time frame. So the same way I wrote here, it lets you protect the position. What does that mean, to protect the position? Why do I need to protect my position? Well, that's because the same way I can make profits, I can also lose, right? And when I lose, okay, if I protect the position, I will get the money back. So during this time, whatever I will lose, I will get back, but only during that time. What does that mean? It means, for instance, let's suppose we take 1 ounce with gold, 0.01. This is just 1 unit. Okay, don't worry, we didn't start a second segment, but in order to demonstrate you the efficiency of this product, I must use a certain scenario as an example. Therefore, we will enable the take profit and the stop loss, and we will defer from this price $20 higher, since we are with a buy scenario, and that makes it 2.78, right? and we will also subtract from here, okay, 20, and then we get to here. Let's also place it on the chart so it will be visible for us. And the same way, okay, the reason that I did it this way is because, just a second, is because I would like to emphasize for you guys this scenario with our protect. So just a second. So basically what will happen is, if at the moment gold, okay, gets from 26.86 to 27.08, we will be making $20, okay, $21.50. And if it gets down to the red line, 26.64, we can potentially lose 21, okay, almost $22. Now, you can see that while I'll extend the duration of this coverage, the fee here, this is the fee, by the way, that we will be paying, okay? You will see that this will expand as time expands. So we will click plus ones. Now it became 8. Now it became, it didn't increase so much. Now it increased to 12. And ultimately, almost $15. Now let's scroll down. And we can see that in here, this is almost as much as our possible profit or loss. So it's quite imperative to make this comparison before choosing the length of your duration, so you won't end up paying a fee higher than what you can lose or gain. Yeah, let me just maybe we can make it a bit more dominant, the example that I'm trying to make. Let's just make it this way. You see, this is a terrible usage of this product. Who can tell me why this is a terrible, let me make it even worse. Okay, why is this very bad? Because the fee here is higher than what we can gain, and well, it's higher also than what we can lose. And then basically in this scenario, we're paying a fee really for no reason using this product. Okay, the reason that I choose $20 higher and $20 lower is to help us understand the proportion between the fee to what we can make or lose. Remember, using this product is in order to protect the position, so whatever we lose during that time, we would like to get back. In other words, if the potential loss is bigger, let's also extend the lot size just to understand. Okay, you see in this case, let's make it this way. You see in this case, we're looking at the same ratio, but with different numbers. You see the fee here is 150 for 2 days, and then we can gain or lose $200. Now, if I will reduce, you see the length, I will reduce maybe for 6 hours or so, then the fee gets smaller. Okay, this is one way. The other way, as we've explained, is also to minimize the lot size. But if I would like to have the best comparison, I can also extend the take profit that I'm looking for. Let's suppose if I'll extend it by another $10, this one I'll decrease by $10. And now you see that the comparison is much better with a ratio of 1 to 2. Sorry. You see, now even if I lose the 300 here, by paying 150, I'll get 300 back. Okay, again, this is also not necessarily comparison that I would use, but you guys understand the idea. This helps you get your head around it a little better. Okay, so we can choose the length, we can choose the lot size. We understand both of them have an impact on the fee. Again, if we take it back to the minimum, it's like this. If we extend it all the way up, it's like that. We reduce the lot size back to 0.01. Now the fee is smaller, and we would like to make this comparison before launching the position to ensure we're using the product efficiently and not paying more than we can gain or lose, which makes the product futile. Any questions, guys, regarding this unique product, which, as I said in the beginning, which is for Forex gold and silver presently? No questions. Excellent. Let's proceed. Let's also erase everything we have here by clicking on the tiny arrow and then clear drawing. Then we'll fold it down and we'll hover onto the left hand side. As we can see, if we carry on down, we have here in the beginning we have our personal details. Then in here trade is where we are at right now. Positions, well, we don't have any positions. That this is where we can find it. Orders, if I have any pending orders. History, which I can filter. In here I have the signal section, which can, okay, again, you notice how easily I can minimize and maximize the chart. So if you click here and you don't see any signals, you gotta fold the chart down, right? Okay, so in this section, we can choose a signal. Again, if we focus on, okay, so before I'm showing you the signal, I would like to show you a valid signal looks like this, with a certain entry, with a certain take profit, with a certain stop loss. As you can see, we have here the time that it was produced by linear order, okay, from the newest to the oldest. If I'll scroll down like that. Okay, and sometimes, because this signal, if we'll choose anything, let's take that, Brent oil. Just a second, this has already passed as well. Okay. So what does that mean, that message? Let me show you a valid signal, and then I'll show you a signal that with this message. Okay, if I'll look at NASDAQ as an example, we can see that NASDAQ has a signal, and it's valid because it has take profit and stop loss. Okay, and if I look at the levels that we have here, we can assess by those levels that we have here to the right which scenario we prefer. It can be a buy scenario or it can be a sell scenario. If it's a buy scenario, my take profit will be based on the resistance levels that are here. If it's a sell scenario, it will be based on the support line that are here. Okay, you don't have to remember that because it's written down here and it's presented up here, and you can match the same levels on the chart if you want to, but this is absolutely not mandatory at any point. So I can simply click here on buy, and then, as I've explained, I've already got the take profit and the stop loss based on the scenario that we saw, and I can click here buy. Let me show it to you again, since this is so super simple. Click here again on view signal, expand the chart if I want to. Let's this time go with the buy scenario. Let's take buy, and we are ready to hit the road. As you can see, I can also change the lot size to something that I prefer. I can also adjust the differences if I'm not entirely happy with the result. I can also enable the execute when price hits, and maybe target the specific price and not the price that we have now. This gives me so much flexibility, and still I can make it, let's see. Okay, it doesn't allow us to do this. It doesn't allow us to do this because this is too close to where we are at right now. Let's target another price. Okay. All right. So execute when price hits. Seems like we don't have the margin for this. Okay, this is why the buy is not enabled. But if we minimize the lot size, let's make it half, then it should be fine. And let's add a 0 here. All right, great. So from what we've learned, using the signals is very, very simple. We saw 1 click, 2 clicks, 3 clicks, and we are good to go. But what happens if we see a signal? I think that it's already was already refreshed on. There we go. You see, sometimes there are messages like you see, like we saw here, and maybe with Brent oil, you see that message here is to show us that the signals, the scenario we saw here has already passed. And now if we try to use the signal the same way we tried to use the signal with NASDAQ, okay, let's click here, maybe sell this time. We're not going to have any take profit and stop loss because as I've explained a minute ago, the take profit and the stop loss are based on what are they based? They are based on the support and resistance presented in here. So if those levels has passed, the same what appears in the message, the market has already reached a key level, then this signal here and the analysis here is futile. And when we see, okay, and when we are looking at here, we see there is no take profit, there is no stop loss. And when we try, it doesn't work. Okay, but a regular signal will look just like that. Oh, well, see, there is another one here. You gotta catch them fast. Let's try FTSE. Okay, so FTSE is fine. You see, if it's like that, if it doesn't have the message, if the signal is valid, and I'm gonna go with one of the scenarios, then we do get the take profit and the stop loss, and we are good to go. We can still modify the lot size and everything I said. And this is again accessible through here. You can also choose if you want. You see this blue lightning icon. You can choose if you want from the outside as well. But keep in mind that sometimes, let's try, see, is this, you see, it works. It worked, but sometimes it doesn't, it have this red message and it means that it's passed. Just pay attention to that and then you'll know if it's valid to use or not. Obviously, what doesn't have this blue lightning icon doesn't have any signal, yeah? Let's carry on down. Any questions though? Any questions before we proceed to the last thing that I would like to show you? Any questions? Excellent, excellent. So let's carry on down. We have here underneath the news section. In the news section, there are different categories. If I would like to read a certain thing about maybe indices as an example, I click here, I see there are 2 articles here. If I scroll down, we see that this is the pre-Asia market brief, and underneath we have the related instruments. If I'll click on related instruments, it's showing us what can have an impact from this article here, right? If I'll go through the article, then I can go to each of the charts presented in here and see how this took place. What else I can show you is down here, and this is the last icon we can find on the list beside the additional platforms, which is irrelevant for us at the moment. So if I'll click here, if I'll point here on the globe and I'll go down to there are many interesting things here, but I'd rather show you Market Buzz and Economic Calendar. The reason that I'm showing you Market Buzz is it allows you to, it can inspire you if you are looking for which instrument to do analysis and what is mentioned online, what has relatively effective news. So you see, this is the market buzz. You can look at things either through looking like a bubble, or you can set it as a table. This is really doesn't make a lot of difference, but let's keep it for bubble for now. But if you prefer a list, so you can go this way. And what we have here in the middle is Facebook, then we have Nvidia, Tesla, Apple, Microsoft. Let's maybe go with Facebook for now. And we have different topics here. Let's suppose we don't want to go through all of that. We would like to specifically, let's go with the layoffs. If we click on the layoffs, we can see that those are the articles that the layoffs was mentioned on. And as you see, there are 436 mentions, which means that Meta is on the table in terms of fundamental analysis, and this could give us a very good hint what is happening. You see Meta plans performance-based layoff affecting 3,600 employees. It's very, very interesting. This is one way. Like I said, we can always go back, choose another instrument we want, and then the same way, see there are the topics here. Let's go with product release, and then we can go through here. Just very accessible and useful. Underneath, we have the economic calendar, and in the economic calendar, similarly, we can just filter what we want. Let's go with, let's point on today. Okay, so as you can see, there is a blue circle here circling the 15th, right, today. And the events that we're gonna see now are events that happened today. If I'll scroll down, just a second, there are many, many things here. You see there is a red line here, which differs between events that already happened to future events. If it's gray like that, you see it's a little less bright than the blue-white words we see here. And if the words are a little gray and we see the actual here, that means that this lines differ from past events to future events. So those events already took place. Now, we see a lot of things, and this maybe looks a little bit unorganized. If I would like to only see news about, let's click here on the arrow to expand the list, and then click again to clean the list. And maybe I would like to only focus on the dollar for now, clicking on United States, and we can immediately see that, just a second, guys. There was a slight delay. I really hope that this delay doesn't, I really hope that this delay is not in the live version as well. So what I was about to say is that we can basically filter by clicking on the flag of what we want to see. And as you can see, we are only looking at US news now. And let's just quickly go through the structure of how this calendar is constructed. So we can see the previous result, we can see the forecast. Actual, we already saw that the actual will appear only when the events took place. We see that this is all bright white, so those events didn't happen. Of course, they're not going to have any result. And then we have the impact. Impact is categorized to low, medium, and high. If we would like to focus only on the major events, we can click here on high. It will only show us that. Of course, we can also extend the date, and instead of looking at the 15th only on the events we have today, we can make it a week forward or even 2 weeks forward. And then when we have this blue light trail, We know this trail is showing us from what date to what date events we can see. And again, it's showing us only high impact, only high impact. And my favorite button on here is, of course, the ability to add it to your calendar and then to quickly review the event and the results specifically to what you want to analyze, which is just amazing. Okay, for free. So this is something I highly recommend. Just make things a little easier to follow. And if I would like to reset my filters back to the default, I'm just going to click here on reset. And then again in here, I can click on the date. And then in here, no, we're good. We're good. All right, perfect. So we went through everything we need in the first part. Now we can carry on with ease to the second segment, the practical part. By clicking on the AvaTrade icon at the top, we can go back to the default screen with no problem. And now let's bring back our notes and let's find an asset to begin with. Let's maybe go with commodities and maybe go down to metals and maybe go to maybe silver and then expand the chart. And let's quickly see how silver is. Okay, so some preparations before we make anything. If you would like to customize the chart a bit better to your needs, it's not going to allow you to move up and down, only left and right. Okay, and in order to move up and down, as you can see to the right, we have the column price. Okay, from the pink line to the right, all this column price. If I'll click anywhere in here, let's suppose we click in here, and then I drag down or up, then it gives me the ability to move the chart up and down. And then I can better design a picture that makes sense to me when I do the analysis. Let's suppose that I would like to scroll down a bit, pull down this chart a little bit, and then make it center. Then I'll place some lines. Don't worry, guys. Everything that I'm doing will be explained. I am aware that I'm doing it a little swiftly, but I do want to teach you as much as I can. All right, so as you can see, I have roughly placed support and resistance line to help us capture a certain picture on the chart. Let's go from left to right. In here, we have silver. I can bring up another asset if I want to. Just search, choose it from the list. But let's stay with silver for now. You see, now it's gold. I search silver, and I choose it from the list, and it becomes silver. Okay, and if I keep going to the right, we have the candlesticks. If I prefer a line, I can do it this way, but let's stay with candles for now. Furthermore, if I'll point on the candles, unfortunately, we get no data from the candles. Why is that? Because the crosshair is not enabled. If we keep going to the right, click on crosshair, from no crosshair to crosshair, and now when it's enabled, we can move across the candles, and we do get the numbers at the upper left corner. If I keep going to the right, we can split the charts to 2 or maybe even 3. We can make it horizontal or whatever picture we want. If we keep going to the right, we can apply an indicator simply by click, drag, and then click save, and it appears on the chart. Let's get rid of it for now because we're going to apply another one anyway. And if we keep going to the right, we have here a bunch of very useful lines. We have here the price line, timeline, and over rectangle. For instance, if I would like to capture a certain time frame for support and resistance, I can just click and drag. Just look how easy it is to customize the chart. Okay, we have Fibonacci retracement. We want to use that, right? And that's very, very useful. To get rid of something, you just click on it, and then we have the white cogwheel to change the coordinates, or the red trash bin. So we can click on the red trash bin, and it goes away. After we have enabled those things, we can begin with analysis, and we can begin with design the position to suit to our needs. Let's bring up Notepad, And in the notepad, write down silver. Underneath silver, I'm going to write down a few things that will help me construct the position with some logic. So I need to have a target, I need to have a time, I need to know what kind of movements I'm expecting for, and the units. I'll give you here simple equations that will help you doing the calculations. So we have target divided by movements equals units, and of course movements times units equals target or summary. Now, why do I need the target? Because without the target, where will I close the position? Let's suppose that at the moment I think that this is a buy, I see this nice green candle, I click here buy, sure. When will I close the position? What to what goal am I trying to get? Will I close it here? Will I close it here? Can it get even higher? Also, what is the reason to close it here or here? And how much can we make? So we don't know all of that. But if we have a target, as an example, 500 or 1,000, let's suppose 1,000, okay? And then I know, okay, if I make 1,000 in here, when I get, if I took a buy and it gets to here, when if it makes 1,000, I can close the position. Okay, furthermore, I can now think of a take profit that will suit making 1,000. Also, beside having a goal which helps me capture when to close the trade or what price to close the trade, I also need to think of a time reasonable to make this 1,000, because $1,000 per week or per day, not bad, right? Per day, okay. What about per week? Maybe also good. What about per month? Okay, that it's more difficult, right? What about per year? Yeah, again, it's the same $1,000, but it means something else when it's in a different time frame, right? So we need to know how long to sustain this position approximately, so it will be worth making 1,000, and it's not too long. Or if it's too fast, we need to adjust it also. Okay, if we're trying to make $1,000 in 5 minutes, it might be adjusted as well. So in the time length, let's go with 1 week, or maybe more than, let's go with 1 week for now. And now we need the movements. Why do we need the movements? Because again, taking a buy here, okay, let's suppose that I buy here, but silver doesn't go this way up. It goes maybe half a way, or it goes until this point when my resistance are much higher. So in this case, what will happen is on the initial step, I'll make profits, right? If I take a buy and silver goes up a little bit, then initially I'll make a little bit of profits. But if it goes down, then I'll start losing. So up or down without any specific targeted price doesn't give me too much. You see how frequent silver turns around, right? We don't see a green candle up to here or anything when silver goes straight. It goes up and down, right? This is why it's important for me to know what price I'm aiming for, so I'll be able to close the position while in profits and take them and get the number that I want. So in here in the movements, let's suppose that we think that silver can get from 23, from 30 to let's say 31. Okay, as an example. How can I confirm that? What I can basically do when we enable the crosshair, we can go to last week. Okay, since our target is weekly, we'll make it 1 week. And in 1 week, I can point on the candle like this. You see, this is the 6th, it's last week. We can see that last week the open was 29,626 and the close was 30.4, okay, which is 80 cents. And I can see that between the high and the low, between 30.6 to 29.3, almost 4, we also have 80 cents, right? Let me just do it with you guys, just a second. Okay, almost 80 cents. And again, with the high and the low. Okay, we have a bit more than $1. So in this case, we understand that the range can be averaged between 80 cents to $1.20. Now, unfortunately, one candle doesn't give us any average. One candle is just one candle, and we have to include many candles to have a more precise average. This way, if we click here on FX indicators, and we are looking for average true range, AVE for average true range, and then we click and drag it to the right, then we can choose how far back we want the ATR to go and give us an average upon. So if I'll choose 10, and I'll change also the color so I won't be confused, okay, then I see that according to the past 10 days, it's actually much more than $1. It's more than $1.50, right? It's more than $1.50. So if I'm targeting, we are now at 30 and I'm targeting 31, it can absolutely get there. Yeah, it can absolutely get there. It's in our range. Our range is 1.6 per week according to the past 10 weeks, which is approximately here, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe even here. Okay, and then we see that until here, the average is 1.6 per week. So targeting 31 is absolutely realistic. So in the movement, I'm going to put ATR equals 1.613. And next to it, targeted movement equals 1, right? From 30, now it's a little less, 30 to 31. Let's bound the entry to 30 flat, so we will know that it will execute the position on 30 and not anything else. And in the take profit, we'll simply put 31, okay, 31. And now we'll take the same measurement for the stop loss, and we can see that with 0.01, we can make or lose 100. Okay, just a second. Let's understand that. With the 0.01, a dollar movement is making or losing $100. How is this possible? Can somebody explain that to me? I'm taking 0.01. There is only $1 movement, and we can make or lose $100. How is this possible? Anybody has any idea? Nobody knows. Nobody knows. This is a mystery. So, of course, the solution here is very, very simple. If I'll go here and I'll choose one lot, we see that silver in one lot has 10,000 ounces. So if I'll cut it down to 10%, 10% from 10,000 is 1,000, means that now we have 100 ounces. Obviously, if I'll cut that down to 0.01, we now have 100 ounces. And because we acquire 100 ounces, every dollar will equal to 100. So how many do we need to make it to 1,000? Well, very simple. We just need to extend it to 10. Or we can use the equation in here, and the equation here will help us. Target, which is 1,000, divided by movements, which is 1, equals 1,000, right? 1,000 units, 0.1, which is exactly what we need. And if we go down, we see we can make or lose exactly 1,000. And now, if we carry on with what we wrote here, we can see that the take profit and the stop loss are with a ratio of 1 to 1. What does that mean, 1 to 1? That means that we can potentially gain or lose the same amount. However, what if I would like to adjust this ratio to be something more beneficial? And I would like to maintain my 1,000 but decrease this 1,000 to 500. What must I do? Anybody has any idea? Anybody has any idea? How can I maintain this 1,000 and lower this 1,000 to maybe 500? This way we can still make 1,000, but we can potentially lose less. Because currently this 1,000 represent 10% of my account, 10% exposure, right? If I'll go 1,000 divided by 10,000 times 100 equals 10%, right? So how can I adjust my 10% exposure to be maybe 2.5%? Anybody has, or maybe let's make it 5, just for the sake of the example. How can I make it 5? So by getting the stop loss closer to the entry, closing the gap, I actually minimize, let's drag it to 29.5, which is okay. So if it's messing around with us, what we can do is we can click on the white wheel and here change it manually and define the coordinates to what we want. And now it's exactly where we want it. And now we have potentially gaining 1,000 or potentially losing 500. And of course, what I can do is I can also expand that this way. And then I have a ratio of 1 to 4. Yeah, the closer I'll get the stop loss to the entry, the less I can lose. However, keep in mind, guys, that there is a certain proportion you would like to keep the stop loss, because if you put the stop loss too close to the entry, what can happen is it can trigger the stop loss and then go to where you want. So you better give the stop loss some room to maneuver. Okay, and as you can see at the moment it looks fine. The only thing I would like to ensure is that I have the ability to open this position, meaning that I have enough money, that I have enough margin. How do I do that? Very simple. I'm going to write down here price per unit times units equals value, or in other words, 30 times 1,000 equals 30,000. Well, how did I know that? Because it's already here, right? It's already here. Of course, 30, the price per ounce times units, it's already here. Furthermore, I have the leverage here. Leverage 1 to 10, okay, which multiplies buying and selling. In other words, thanks to the leverage, my account has the strength to buy or sell 10 times more than what it actually has. Meaning, as you can see, the margin impact is 3,000 instead of 30,000. Why is that? Because when my leverage is 1 to 10, I only need 10% of the actual value. I can divide 100 by the leverage, and then I will know my margin percentage. But at the moment, if we're looking at this comparison, we can just divide the value by the leverage, and then we get the margin impact. In other words, 30,000 divided by 10 equals 3,000, which makes it margin impact equals necessary amount to open the position. Let's quickly recap what we have done today, guys. Initially, we roughly estimated where silver is at. We've placed support and resistance, and we saw that silver has the potential to go a little higher. However, we were not sure at what point silver will turn around. Maybe it will turn around in here, maybe it will turn around in 31, maybe it will turn around before that. So we went to the previous week and we compared the levels: open, close, high, and lows. The levels that can be found up here when I point on the candle. We have the levels, the ATR, and the date above. Now, by looking at the candles only, we understood that those numbers are a single candle, and we cannot have an average from a single candle. We had to go back and accumulate more intervals. The problem is that this takes a lot of time to write down all the numbers, then add them, and then divide them by the number of candles we took. Instead of it, we applied an indicator called average true range, which helps us, which gives us the average by defining how far back we wanted to go. So we placed 10 in the length. We kept it as wielders. We have simple weight and exponential. We keep it like this for now. And this is referred to the time frame presented on the chart, meaning that this 1.6 is the average per week. But if we would looking at, let's take this, you see the average per day is 40 cents. The average per maybe 4 hours is even less, right? 20 cents. But the average per month is $3. So the ATR is depending on the time frame that we have. Okay, this length is depending on the time frame that we have. After we have applied the ATR, we have set a certain target. We have set a certain duration for the position. Oh, we almost forgot to write down the answer here. We'll do it now. We'll do it together. So after we saw that the average movement, oh, we'll bring it back to weeks. After we saw that the average movement is 1.6, we decided that 31 is a viable target price. Okay, since this is the average movement, this is even less. Yeah. And then we wrote that down in our movements. $1 is what we expect that silver will go. And because we want to achieve 1,000 and we are aiming for $1 movement, we need 1,000 units. Let's erase the dollar here, right? 1,000 units, multiply $1, like written here. Okay, movements, $1 times units, this is the unit, equals 1,000. Okay, great, great, great. But if we used, okay, so we've placed the take profit the dollar higher, and the stop loss was initially with the same length, but the other way around. Now, if we were not happy with the 1,000 and the 1,000 that we had initially, because it was like this, you guys remember, right? Then what we can do is we can extend we can minimize the length between the stop loss to the entry. You see, I can click here on the plus. Let's click like this. It just takes a very, very long time. But you see that when I extend, when I make the value increase closer to this to the entry, then the loss became less. You see, now it's less. I can keep going like this, but I'd rather just use round increments, and putting it like this actually draws back from 100 to 250, and this is a comparison that I can work with. Yeah, and the last thing that we did is we reviewed the necessary amount to open the position to ensure we have the ability to take this position. Of course, if we would, for instance, need a bigger position like that, we wouldn't be able to do this because the margin impact is showing us the necessary figure to open the position. Okay. Also, I would like to tell you guys something. Having the ability, you see this way with 0.3, this is a much bigger position, okay? 3 times more. Sometimes, even if it shows me that I can take the position, but I'll be using 9,000 out of my 10,000, yeah? Never mind that the impact will change accordingly, right? But just this large percentage of usage out of my margin is something that I might want to prioritize, because at the end of the day, my margin is here to do a few things. It's not just to open the position, but it's also to maintain it. So I need to ensure that my account level, my margin level is always above the necessary level. And this way, if the market go against me, I can withstand the fluctuations and the position is not going to close my position. Okay, because if I open many positions, let's suppose I open another position like that, I'm using 3, then I have another position with Nasdaq, I have another position with gold, whatever. Okay, and then my margin will be all of it will be used. That means that I'm not going to have any remaining margin to do something else, and then this is sometimes a situation that I would like to avoid. Okay, so manage your budget and your margin properly. Unfortunately, for today, our time has run up. I hope that everybody learned at least one small thing from this webinar. Of course, you're welcome to join us tomorrow with a live Q&A. Join us with your questions, and hopefully you'll get the answers right on the screen. Other than that, I wish you all best of luck with trading. Have a fruitful week and have a good day.